General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock this workout. Still in second quarter. We almost halfway through. Still in week 1. Today's Tuesday. Six, 3, 25. What's the news for tomorrow? Tomorrow's the last textbook day of the week. Monday and Tuesdays, following ICT protocol. Some more 10 o'clock news, which is kind of like right when I start. I'm on screen grabber. There we go. So 8:30 and 10 tomorrow. High impact news. Let's get this Fed watch. I don't think Joe's. It pushed NASDAQ up, but we pretty much locked in a no change, almost 100%. This, hold up, I went a little bit too fast. No change is locked in for, I believe that's June 18th. %, no change, locked in for June 18th. Let's see if it helped, which it probably didn't. Probably pushed this up. So it's about the same. %74.3%, no change for July 30, pretty much unchanged. Unchanged from yesterday. Earnings, I know Broadcom is Thursday, and earnings haven't really been moving. the market. If it's not top 10, it don't move it. So Google, Nvidia, Apple, Netflix, stuff like that. That moves the market, not CrowdStrike. No offense to CrowdStrike. They might be there one day. The Five Below. Yeah, none of these earning releases will move the market. Let's go to the dollar on the daily. Okay, we got that push back up. What I was looking for. I wanted to come up here and take care of that first. This is a balanced price range. We kind of respect the 50% of it, but I'm still thinking this is Jobs. Jobs was good. Forecast, yeah, Jobs came in strong. Thinking higher. Higher for the dollar all week since it is mainly focused on employment economic releases. The jobs numbers week with NFP. I mean, that's a one directional swing on some Forex pairs. Let's go in here. Okay, we came here. We came to where we supposed to come. Tried to catch a rebalance sale, but we just pushed up. So it wasn't really no good sell to buy type day. It was kind of one sided. Target here. Nice up day. Just looking at the weekly. Next key levels right here. Well, it's really previous week's high, but let me set an alert here though. Previous week's high is next on the menu. Price might as well snatch that buy side liquidity. It don't look like we closed through it though. It looks like what's this closing price? Wow, we closed under this. That's an interesting point of view. Look how it went to 50% of the daily fair value gap. This is interesting. Interesting notes. Look how we respect it. Consequent encroachment. Gotta say it right. Of the daily fair value gap. And price closed under the consequent encroachment of the daily look. still think higher since we did not create a strong bearish signature. Okay. We're not even dropping. Previous week's high is next though. So let's put this here. Might as well, right? Just snatch it. Any other subjective weeks. This week it's kind of choppy. But this week did its job. It pushed down, came up, came back to 50%. This pushed up, came back to 50%. 50% of a weekly level should be noted. Let me put this here. Go here, this. Previous week's high is the most likely DOL. We don't have any signs of rejecting bearish levels. So buy retracements. See, it'd be perfect if tomorrow starts off. Hold up. I thought I was going to do something. If tomorrow starts off pushing down so you can catch that buy. Even here, like this gap needs sell side, buying under this daily low, current week range 50%. Put a box here, 50% in this range, lines up with this previous day's high. So this is what I'm gonna watch here. Price coming to discount. Oh, previous day high. See if they offer support to push. If we start closing through it, then maybe we can sell a retracement to target Monday's low, but that's gonna be like the mile marker. Previous week high is the target. That's it. Alert set on Monday's high. Alert set on Monday high. We could trade the bounce. And if Monday's high fails to hold, we can sell the retracement to Monday's low. That's the plan. All right. That's that on that. Y'all have a good day. Peace.